What up, guys? CK Sanders here. Some of you know me, some of you don't. I know. I was asked to start a YouTube to talk about stocks and investments in car hacks, so here we are. A little bit about me and my background. I've been trading stocks since 2009. I took a main master in college, which was class for 4 hours a day, 5 days a week for 3 weeks. Worst decision I've ever made. However, I did learn how to trade stocks, so I'm here to teach you about some of the things I've learned over the years. On your screen, you can see 1 day, 1 week, 1 month, and 3-month trends using my personal Robinhood. I have whited out the dollar amounts as the actual dollar amount isn't important, and a lot of people get caught up on that. What you want to look at is the percent. What percent return are you getting on each investment? Today, I will be going over 4 great stocks to buy during the COVID-19 pandemic. Those stocks are Microsoft, Visa, Mastercard, and CocaCola. They're all large companies, they all have great upside, and they all have large economic moats, which I'll explain what that is shortly. First and foremost, Microsoft. Microsoft is a great company to be in right now. The reason I believe Microsoft is so good is not only are they a large company that you can be fairly certain isn't going away anytime soon, they are actually adding lots of growth across the board. Right now, Microsoft is still trying to innovate and still trying to expand, which is great when you're looking at a company to hold for a long period of time and hope will rise in value over the future. Let's take a look at the 5-year history for Microsoft so you can kind of get an idea and see what I mean. Alright, look at this trend. This is exactly what you want to see. Microsoft has been going upwards basically non-stop until you see that little nosedive for COVID-19 right there. But don't worry about that little guy. As a whole, Microsoft has only gone upwards for the last 5 years, and there are several reasons for that. One of which is they just make a ton of money. You could probably walk into any office in the country, globally even maybe, and people are using Microsoft products. A lot of what worries some investors is future growth. Well, Microsoft is on top of that too. They have added cloud software, among other things, to continue to grow in the future. This is exactly what you want to see from a company. Microsoft saw Zoom popping off and other video chat platforms, so here comes Microsoft Teams. They are always either innovating or buying out companies they believe are innovative. Microsoft has a tendency sometimes to say they don't want to compete, which, as you as an investor might say, why is that good? The reason that's good is they literally just go buy potential future competition. Microsoft is so big, they can literally pay billions of dollars out of pocket, like for LinkedIn for example, and just not have to worry about the competition. And they will then have another revenue model already set to go that's already proven and already working. But don't just take my word for it, do some research. Check out these analyst ratings. Out of 35 analysts, 89% say it's a buy and 11% say it's a hold. Before COVID, I believe that was about 93% and 7%. Microsoft has what you call a large economic moat. What that means is, even if there's an economic downturn, Microsoft won't be so affected. The reason why? So many businesses rely on Microsoft. Everything that's still standing is going to continue to use it because they literally need it. Whether it's Microsoft Word, PowerPoint, Access, Excel, businesses and individuals across the world are going to continue to use Microsoft no matter what the economy looks like. Also, they have very little competition for their main set of services. So what that means is no competition, and they're going to be used even if people are running out of money. That's a great business to be in. Next up, we have Visa and Mastercard. And yes, there is a reason I'm putting these two together. Let's also take a look at Discover and Amex. Check out these 5-year trends. Why do you think the 5-year trends of Visa and Mastercard look quite different than Amex and Discover? This is where research really comes into play, and you have to have a lot of insight. When I was told that Visa was a great buy, I went and looked at it, and in fact, it did look like a great buy. Based off Visa being a great buy, I went and looked at Mastercard. Mastercard also looked like a great buy to me. I then went and looked at Amex and Discover because, well, to me, all credit and debit cards are the same, right? Incorrect. Visa and Mastercard they don't pay out any money for any bad debt. If you default on your credit card, or if someone runs up fraud charges on your credit card and you claim the fraud, Visa and Mastercard don't pay that out. The bank they are linked to pays it out. Your Bank of America that has your debit card linked to Visa, Bank of America will pay that out. Versus Amex and Discover, they pay out the bad debt, they pay out the fraud. That really eats into profits. So most of Visa and Mastercard is all profit, along with marketing dollars and spending on employees. Completely different scenario. Also, Visa and Mastercard are definitely looking toward the future. Visa and Mastercard have both accepted and paired with cryptocurrency companies. The reason this is so important is you can tell they're looking to the future. Even if you don't agree that cryptocurrency is the future, it means Visa and Mastercard are hedging their bets. You want companies that do this. It's similar to Microsoft, always making sure they are the leader and don't really have to worry about competition, and creates that large economic moat. Also, Visa and Mastercard are both diving deep into emerging markets like Africa and Asia. So as less and less people tend to use cash and more using debit and credit cards, Visa and Mastercard are on the forefront of that. So their profit is only going to get higher and higher, which means stocks are only going to rise. Last but not least, we have CocaCola. The reason I believe Coca-Cola is a great investment right now is they're vastly undervalued and they pay great dividends. Yes, every stock that I've listed today does pay dividends, but the price of Coca-Cola right now, compared to their dividend price, you will be up over 3% a year on your investment just based off dividends. Which, who doesn't like to be paid for basically doing nothing other than letting your money sit somewhere? So if you had a savings account, I guarantee your savings account isn't going to net you 3% year over year just based off the initial investment. That's great. Let's take a look at the 5-year trend. Coca-Cola's 5-year trend isn't necessarily as impressive as Microsoft, Visa, or Mastercard. However, they are a true staple. They're literally 3 times larger than their next biggest competitor, which is Pepsi. And they continue to grow. Coca-Cola is also like Microsoft in the fact they don't really like competition. They had competition one time and they had the opportunity to buy it out and they didn't because they didn't think it was going to be an issue. That competitor is now Pepsi. So when Coke has opportunities to, they either buy them out or create an alternative. They tried to buy Gatorade, but Pepsi ended up getting Gatorade. So what did Coke do? Here comes Powerade. Coke is always looking to expand and create new avenues to make revenue. Once again, let's take a look at these analyst ratings. Out of 21 analysts, 76% say buy and only 24% say hold. No one says to sell, and that's because you definitely shouldn't. Coca-Cola definitely did take a big hit because of COVID-19, but guess what? It's not going anywhere, and most Coke products are cheap, which means even in a recession, people will continue to buy them. The only reason they even really took a hit is because a lot of places that buy Coke products were shut down during that time. You know, restaurants, bars, movie theaters. These places sell a lot of Coke products. So, since they couldn't be sold, the stock collapsed a little bit. Like I said in the beginning, that makes it extremely undervalued. Coke has already hit above $60 per share, and now it's trading under $50. That means you can make a significant percent increase over the next year or two. Alright guys, thanks for tuning in. That's the first video. With that said, I hope you guys learned something. And I do need to give the disclaimer, I am not a licensed financial advisor. I have just been doing this for a very long time, and I'd like to give back some knowledge that I've learned over the years. If you guys have any questions or want to know more about specific topics, go ahead and leave it in the comments, and I'll check those out, and hopefully can get videos about those soon. Don't forget to subscribe so you're ready for the second video, are oil stocks a great buy in 2020? It's something everyone keeps asking me, and I definitely feel I need to speak on it. If you currently don't have a trading platform, I've definitely dropped my Robinhood link in the description, so go ahead and check that out. You'll get a free stock, and I'll get a free stock. Who doesn't like free money, right? Thanks for watching. Catch you guys for episode 2.